The Nigerian digital lending industry is currently in a dire state, with both lenders and borrowers expressing concerns. The lenders, commonly known as loan app companies, are worried about the high levels of indebtedness among borrowers. Meanwhile, borrowers are lamenting the exorbitant interest rates, which are making it difficult for them to repay their loans and pushing them further into debt. Now, some of the loan apps currently offer annual percentage rates, APRs, ranging from 34% to 271%, with repayment periods of 3 to 24 months. While these rates are significantly higher than those charged by traditional banks, digital lenders argue that the risks involved in their lending model are also greater, and many of the customers may not be able to secure loans from banks. Furthermore, digital lenders reveal that a significant portion of the funds used to operate their lending businesses are borrowed from banks, with banks' interest rates already factored in. This suggests that the high costs are being passed on to the end consumers, contributing to the affordability challenges faced by the borrowers. In today's episode, we'll explore how soaring interest rates and rising non-performance loan or performing loans threaten the viability of loan app businesses in Nigeria. Welcome on board. I am Justin Nakadonye, your host. Welcome back from that quick break. The chairman of the Money Lenders Association, the umbrella body of registered digital money lenders in Nigeria, Gbemi Adelekun, justified the high interest rates charged by loan apps. He explained that the rate reflects the cost of funds and technology used by these digital lenders. According to Adelekun, digital lenders do not receive deposits like banks, so they have to borrow money from banks to operate their businesses. However, it is important to know that some digital lenders are licensed as microfinance bank by the Central Bank of Nigeria and can therefore accept deposits, similar to commercial banks. I have a state surveyor and public affairs analyst, Mustafa Iwela, joining me now for more discussions on this. Thanks for joining me on Business Insight, Mustafa.
Thank you for having me, Justin.
All right, it is indeed our pleasure. The situation is really alarming, and these lenders, they charge as much as 34% to 271%. That's the accumulative percentage they charge for their loans, which range from like 3 to 24 months. In as much as they are trying to justify the fact that it's because of the high interest rates in the country, others don't see any reason why they can borrow as much as 2.5 million and be paying back over 6 billion naira after 24 months. How do you react to this?
Okay, thank you for having me, Justin. So it is very critical that we have this type of discussion at the front burner of our discussion today.
Yes.
In a time where Nigerians are going through a lot of hardship. Yes, so according to a certain report, as at April 2023, our the money lending ratio declined from 4.5% to 4.1%. Also, our liquidity ratio as of May 2023 also increased from 44% to 48%. Yes. And this is above the normal 30% minimum recommended by the prudential requirement. So, it suffices to say that there's a lot of activities going on within our money lending sector, and everything rises and falls on the FCCPC, which is a regulatory body that governs that sector of the economy, which is the Federal Competition and Consumer Protection Commission. This commission is, of course, backed by law. I think sometimes in April 2018, and a lot of irregularities in that sector. As we speak, sometimes in May last year, the approved digital lenders by FCCPC, they are only about 284. And I think sometimes last year also about 34 of them were blacklisted for different purposes, for different reasons. So it's hard because most of all these money lenders, again, take loan from the banks. For whatever it takes, they also want to make profits, and they are also in the business to make money. So if our current interest rate with CBN is about 26.25%, so any money lending company also will want to make profits. So that's why you have customers or borrowers paying huge interest. I had a case of somebody who was to borrow 2.5 million. I had to pay about 6 million in total, which is about almost 4 million naira interest. Well, it's because of the situation we find ourselves. For whatever it takes, the CBN, the FCCPC needs to do a lot to, overall that sector. There's no way people won't borrow money. Currently, as we speak now, our non-performing loans with the SMEs is close to over 1.32 trillion. So the default rate is high, non-performing rate is alarming, and the reason for that is not far-fetched.
I know it is, but then, like you have said, it's just a situation in the country. But alternatively, now, what can Nigerians begin to do for those who really have genuine reasons for funds and they need capital, to boost their business, their small business from point A to point B? What can they be doing when the microfinance bank said that ordinarily should be funding them and not really doing so much to meet their needs?
So let me say that it is insane for any businessman to go into any business without taking a loan. It is insane. You don't go into a business and invest all your personal funding into the business. In case, what if it goes wrong? Then you're going to be bankrupt. So it is always very easier to share the risk between a microfinance or a commercial bank. It's easier, it makes life easy. So you make money, the bank is also making money. But why we have a lot of default rates is because of high interest rates. That's why it is very critical that we also differentiate between the approved digital lenders and the loan sharks. The loan sharks are the ones that will give you high interest rates under illegal conditions.
Yes, and very short terms.
Very short term
to pay back.
And don't get it twisted. We have them in Nigeria. We have them in other climes too. But whatever it is only in Nigeria that people see taking loans as a shameful thing. It's not a shameful thing. It's a normal way of life in advanced countries.
Yes, they live on credit.
They live on credit. So in order for you to be credit worthy in advanced countries, you must have seen to be taking a loan and you must have paid off that loan successfully. That's when you become credit worthy in the eye of the government. That's when you have access to a lot of opportunities of bonuses from the government. But so here in Nigeria, we see it as
loan in itself is not a bad thing.
It's not a bad thing. It's a way of life. That's the honest truth. It's a way of life in advanced countries, and we need to also imbibe that in Nigeria. But one of the biggest issues that the ADLs are going through, the approved digital lenders are going through, is that a lot of people who cannot access loans from commercial banks due to bad credit are the ones that the ADLs are giving loans, and that's why they are putting high interest.
So since these people cannot get from the commercial banks or for deposit money banks now, so shouldn't that be like a red flag for these ADLs not to even give them, since knowing that they don't have character and integrity, as it were?
Okay, so your inability not to be able to pay off loans or to pay off your current loans with commercial banks or certain banks is a lot of business for some certain money lenders to this. So those ones, they focus on people who have bad credit.
By default, that they would extend their bad credit worthiness on credit worthiness.
Yes, they will extend it, but now, so that's where the FCCPC also comes in. So a lot of approved digital lenders will give you loans and they know that you have bad credit. When you default, their mode of recovering the loan is very, very unprofessional.
True.
Some will go as high as tarnishing your image, your phone contact, and all that. But a lot of Nigerians don't even, when you apply for these loans, you just click accept, agree, agree, and those things you're agreeing to are agreement to say that if you default, we're going to access all your contact and tarnish your image. People don't read all the terms and conditions when applying for these loans. That's why when it looks like they're trying to recover that, but again, that's not a professional way to recover loans. I think normally if you're owing any bank, whether ADLs, the microfinance, the normal way is they take you to court. They get a court judgment, and there's a process called garnishee. They garnish your account. They put your account. There's BVN. They flag your BVN. Any money that goes into your account through all the banks that you use, they take off whatever you're owing them, and everybody goes in peace. Unlike the very shabby way of going after you in places and tarnishing your image on social media. That's a very shabby way of loan recovery. So again, taking a loan is not a bad thing. Our non-performing rate right now is really high. That's the truth. I mean, there are a lot of non-performing loans everywhere. Commercial banks, microfinance banks, even all the big names, all the big fish. But I mean, it's a situation of the country that we find ourselves. Our inflation rate is huge. Our interest rate is high. A lot is going on right now economically. So again, I think those are the Apex Bank needs to also do a lot to cushion this effect for Nigerians. Everybody wants to establish a business and make profits.
True.
Some businesses are currently at the verge of winding up as we speak because of the high interest rates of servicing loans. those in the real estate sector also are also complaining they can't even pay back loans. Go to a lot of projects abandoned, a lot of businesses abandoned. Some businesses are even thinking of leaving Nigeria to other countries because of the cost of servicing or running a company in Nigeria. So a lot again rises and falls on our government. Taking loans is not so a big deal, but the interest rate also I think needs to be reduced.
Okay.
If the commercial banks reduce their interest rate drastically, then microfinance bank also will reduce theirs too, because the commercial banks, I think everything also falls on the CBN. If the CBN now, just 2 months ago, the interest rate was increased to 26%, and so we don't know what's going to come in the next coming months. It might also be increased again. So these things trickle down. So, and I mean, again, it's the fault of the government, but we hope that something is done soon.
Okay, so now for businesses now who have challenges in performing with their loans and all that, now, what would you really advise them? They have taken these loans, and as it is right now, just because of policies and economic policies by the government, their businesses have been impacted, and their working capital has reduced, and they are not really making so much out of their venture. So what do they need to do right now, in as much as they still have these loans to pay, and they don't really have the wherewithal? What would you advise them to do?
So what I think is doable is, I mean, for any business who has taken a loan and is struggling to pay back, I mean, it's simple. Sometimes there's what we call loan restructure. You can always call your account officer. You can always, strike out a deal whereby you can restructure your loan, and you pay at a more longer tenor, and of course with another interest rate that will be easier for you to. So because if you have a loan that is running and you don't keep up with that loan, it's going to be difficult for you to access other loans from other commercial banks in the nearest future for other businesses.
Yes.
And as a businessman, that is not what you want to be going through. Our role model, the biggest businessman in Africa that we all look up to, Dangote, took a loan from his brother to start the company, and look at what Dangote has grown to be today. So I mean, it's about the paying back culture. I mean, a lot of us take loans with the mindset of not paying back. These loans are not national cakes, are not national. They are business money for businesses. So when you take loans, I have taken loans at some point in my life when I started my business, but I took up the habit of paying back, because I know that if you don't pay back, you might get an invoice for a contract and you don't have the funds. How do you have to go to banks, and banks can help you get this loan sorted out, and you're able to execute properly. So, but if you don't, so some businesses actually don't have the capacity to pay back genuinely. Some have the capacity to pay back, but they don't just want
just don't want to pay back
for reasons best known to them. I think that's a bad way to run a business, because no matter what happens, you pay back one way or the other, because the person who has given you the money will come after you.
Okay, so speaking of legal means and everything now, so for people now who genuinely need credit, it may be for personal reasons or maybe for some challenges that they have, what would you really advise them? How do they go about differentiating between the authorized money lenders and of course digital lenders, that is, and of course those loan sharks?
So the honest truth is, all these things are information that are in the public domain.
Okay.
The approved digital lenders as of May last year was, as we speak, is 284.
Okay.
The FCCPC back said about 34, and unfortunately, some of those 34 people are still trading.
So how do they even get access to, as in, permission to trade?
So that's what I'm saying, that there's a lot of overhauling that needs to be done in that sector. The FCCPC needs to be more proactive. Once you have blacklisted someone, they do not have any legal right to still operate. Some even open loan apps that they're not licensed, and people patronize them, and they give
sometimes
them.
I hear they harvest your data that they even use for other illegal stuff.
Yeah, so a lot is going on in that sector, particularly from all this. That's why they call them loans. Some are legal, some are not legal. So that those that are not legal are called loan sharks. So they operate under their own conditions, and nobody's regulating them. So again, it's very impossible for anybody not to, because I mean, we live in a country where nothing is certain. Your cost of living in a month is not certain. This month you can spend 100,000. Next month, the cost of living is going to 500,000. Nothing is certain. So every other time you need to assess these loans for you to keep up. But again, the habit of paying back is also very vital. People must pay back for these companies to remain in business. Okay. So, but for the loan, for the shabby ones who go after you, who post your pictures about the social media, I think that's very unprofessional, and the government needs to clamp down on them.
Okay, so as we round off now, what would your last word on this be for the government, for genuine borrowers and, of course, the microfinance industry and general businessmen who want to really get access to credit?
So for the government, I think the government, particularly CBN, needs to do so much to reduce that interest rate. That interest rate is killing, and it's taking a ripple effect on every other sector of the country. For those who want to borrow genuinely, it's a good cause. There's no genuine business owner who has not borrowed money from any bank at any point in time, and that's the way to even run a business. You don't go into a business with your personal funding. If anything happens, you might go bankrupt. So share the risks. Let the bank, bring half of the money. You put in some equity. Then everybody smiles to the bank at once the project is executed. So that's the way to go. But again, the habit of paying back should also be imbibed. You should also pay back your loans. That's very critical.
All right. Okay, well, also a very big thank you to you, Mustafa, for all of the wonderful insight that you have brought on the show. We just hope that the needful will be done from the part of government, and of course, those who borrow should always want to pay back and not just borrow and just allow yourself to be chased about by these lenders. Thank you so much.
Thank you for having me. Thank you for having me.
All right, that's the size of the show. We've been looking at access to credit and how it has impacted on small businesses, the household, and of course, even the lenders themselves. I was joined by Mustafa Iwenla. He is a real estate surveyor and a public affairs analyst. We'll be right back again some other time. Many thanks for being a part of the show. My name is Justin Akadonye.